So if you've been planning on buying a house, you either have probably run into the common question, should I go with a bank or should I go with a direct lender and broker to get my home loan from? That's probably one of the biggest questions that I get asked from a lot of people is like, Noah, who should I go through and why should I go through them? So I wanted to make this video kind of breaking down the difference between going through a bank to getting a loan versus going through a direct buyer or a direct lender or broker. So we brought on our preferred lender, Manny, who is works with Centennial Bank here in Sarasota. So I wanted him to kind of break down a little bit of the difference between, okay, why should you use a bank or why should you use a direct lender and broker? Because depending on your situation, there's a lot of different variables that come into play as one may be better than the other, or you may want, or they're pretty much a wash, whether or not it's just more convenient for you to use a bank versus using a direct lender and broker. So Manny, I appreciate you kind of hopping on this video and kind of going through with us the difference between the two, because a lot of people, some people think that, well, I know a lot of people say that banks get a bad rap. Is there's a lot of reasons why, and we discuss this on other videos too, is, banks may not be quote unquote as trustworthy, or they're predatory in their lending, stuff like that. But like, that's simply not really the truth. And, so there's a lot of advantages of going with a bank, like we were talking about with portfolioing loans and all these different things that banks can do that direct lenders and brokers can't do. So I want you to kind of break down a little bit of the difference between banks and lenders, or banks and brokers and lenders, and what that really looks like. So
Absolutely.
I guess let's just start off by talking about, like, who are they? Like,
Absolutely.
who are each of these people?
Absolutely. So your bank is obviously your banking institution. You got your national banks, you got your regional banks, you got your community banks.
Yep.
Centennial Bank is a regional bank which lends nationally, but we are regional. But as far as mortgage goes, again, we can lend in all the 50 states. Brokers have to be independently licensed per state, so they're not federally chartered.
Yep.
So that's one of the things. Some brokers will call themselves direct lenders. That's if they can use the government-sponsored entities as their backing, meaning Fannie Mae, Freddie Mac,
Yep.
Or Ginnie Mae, will back them, will underwrite they can underwrite their loans, but they will fund those loans for them.
Sure.
So that's the difference in a broker and a direct lender.
Sure. So then let's just say, so what can each of these entities do? What can a bank do, and what can a direct lender or broker do?
That's a great question. So a bank can do it all. A bank can keep the loan if for whatever reason things are going awry, because most lenders, whether they're banks, brokers, or direct lenders, most of them are sending it to the GSEs anyways, the government-sponsored entities. But if for whatever reason the loan does not meet their criteria, then the bank can keep it and they will portfolio it. It has to make sense.
Right.
The bank is not going to keep a loan that they feel that you cannot pay. They will only do that if they feel like you can pay. You have compensating factors, whether it be you have a lot of assets, whether you have a great history of owning multiple properties, whatever the case may be. But they do look for compensating factors to say, okay, Mr. Noah can afford this deal because of A, B, C, D, E, and F. So we feel comfortable lending to him. We're not putting him at risk or ourselves at risk, so we'll keep the loan. Brokers can't really do that.
Right.
Brokers, if it just doesn't fit, it doesn't fit. Even direct lenders, which I might want to emphasize that direct lenders and brokers are very, very similar, with a few differences. So
let me just correct me if I'm wrong here, but let's just say for easy explanation, banks can either be the middleman, or they also can be the end quote unquote buyer for it, so to speak, of the loan.
Absolutely.
AKA keeping it in-house themselves.
The mortgaging.
While direct lenders or direct brokers, they're always going to be pretty much the middleman, so to speak, before sending it off to the secondary market for like Fannie Mae, Freddie Mac, all these other possibilities out there. So that's basically who they are. So
Correct.
just the middleman.
Correct. Correct.
And then banks obviously can be the middleman, or they can be the end user, the end buyer of the whole loan product.
Correct.
So I think that's a key difference between the two, is that maybe banks may have a little bit more creativity, a little bit more flexibility, while direct lenders, direct brokers, they have a certain box and a certain criteria that they have to keep.
Correct.
And if a specific person or a client does not fit within the box, they either can't get them approved or they got to send them somewhere else.
Correct. Correct. Absolutely. So one of the things that probably has never been really said is, whether you're a broker, a bank, credit union, everybody instinctively wants to go to Fannie Mae, Freddie Mac, one of the GSEs, one of the three GSEs. Reason being is because pricing. Your rates will always be the best through those GSEs. Which brings me to another point. These GSEs do give pricing to lenders. So if you're a broker that sends Fannie Mae one deal a year, you're not going to get the best pricing out of Fannie Mae. As a bank, we do multiple deals with Fannie Mae, so we have better relationship pricing with them. So that's something that I think is important to realize, that GSEs have relationship banking with these brokers, the direct lenders, and the banks. And since the banks typically do the most volume, they usually have the most leverage.
Right. Okay. That's interesting. I guess I've never heard of that before. And basically the relationship pricing benefits are mainly towards the people that do the larger amount of volume for transactions, basically.
Correct.
So it's more of it incentivizes banks and other people to go through Fannie Mae more, Freddie Mac more, just as much volume as they can get, they're going to take.
If I was to go independent tomorrow, I would probably be as a broker. I don't necessarily fit the qualification criteria to be a direct lender.
Sure.
But regardless of the fact, even if I was a direct lender, I would still always go through the GSEs because I get better pricing through them.
Sure.
It's all about the relationships.
Right.
And the more loans I give them, the better my pricing will be. The better my relationship. That's why, you can, as a broker, you might make more per deal, but when you're out there offering your benefits to the public, you're limited because you're not getting the best pricing available. So how can you offer it to your clients?
Right. So I guess that brings me to, offering different products to different clients, but like where are these people located? Where are these entities located? Like banks, direct lenders, and direct brokers?
Right. So, the GSEs are the government-sponsored entities. That's Fannie Mae, Freddie Mac, and Ginnie Mae. Ginnie Mae is not very common or heard of, but it's basically taking care of your FHA loans and your VA loans.
Right.
Then your banks, obviously, are FDIC insured. Your national banks can lend nationally. However, you might want to ask if that's their appetite, because just because they're a national lender doesn't mean that
they will lend.
That they will lend, or that they'll give you the best pricing.
Right.
Some institutions do have an appetite for certain types of loans, and it's their niche.
Right.
I'll be honest. Sometimes I can't compete with a Stanley Morgan, a Morgan Stanley, or a Chase because they may be with their wealth private channel.
Correct.
And if they have a large amount of their assets and they have private wealth advisors, I can't compete with that because that bank has their money. They know how much of it they have. They know when it comes in and out. So they take care of it, and they incentivize the clients to keep their money in all their business.
Exactly.
So
yeah, I had one client. Now that you're saying that, I had one client that they had their primary bank in one state, and the bank never has they lended one deal in Florida before, and because he keeps a significant amount of his assets in that bank, they were like, okay, we will lend. Down here in Florida, making it our second ever loan that we've ever done in the state of Florida. And they were across the country. And they still gave them better pricing than any other bank would down here because it's, once again, the relationship between the client and the bank, and obviously assets in the bank. They wanted to keep their assets there instead of moving it down here. So banks do different things for certain people. It all just depends. Once again, money talks.
Absolutely. Exactly.
So that's another good point to bring up, is obviously assets in a bank kind of gives banks a little bit more of an incentive to go after different products, to go after different things that they typically wouldn't.
Absolutely.
And so I guess lenders and brokers, like, where do you find those guys? Are they
so
anywhere?
brokers most of the time will tell you they're a direct lender.
Sure.
And they may not necessarily be a direct lender. And you may not even be able to figure out if they are or aren't. It's just because I've seen many, as long as they have an NMLS number, they could be considered a broker or a lender directly. And that's just a term that they use inside of our industry to, I guess, make themselves a little bit higher than a broker, but not quite a bank. So that's where they use that terminology. But you can find these people everywhere.
They're probably the most common, you'd say.
Brokers are the most common. You'll hear a lot of, in my opinion, myths that you'll save $9,000 to $13,000 on average with a broker. I think that's a myth. I think that's very subjective. Because often, like I just said earlier, banks typically do more volume than brokers.
Right.
So typically, I'm not saying always, but typically, they have more leverage. They have relationships, relationship pricing. They have a few more
perks.
Yeah, absolutely.
Okay. So what would you say are some reasons that someone should use a bank or someone should use a lender/broker?
That's a great question. I think if you're somebody that's very well qualified and you may need a little bit of creative financing, I think a bank is always a good avenue to explore. Credit unions are also great avenues to explore. I mean, at the end of the day, it's just a big myth that banks are more expensive, are slow. It's just big myths. But I still think, I would definitely sit down with a lender first, look at the numbers, and you can always sit down with a broker as well and compare. You know, you can compare the documents.
Yeah, and like typically everyone's situation is a little bit different. And obviously, if you already have significant amount of assets in a bank, that bank's probably going to treat you a little bit better than a lender or broker because they don't obviously have money tied up with you.
Correct.
So I think that's another big differentiating factor is if you already have a significant amount of assets in a bank, they're probably already going to give you better pricing than any other broker or lender out there would. So, I mean, I would probably lean a little bit more heavy on the banking side for that purpose. But if you're just like, you're moving down to Florida or you're moving down here to Sarasota, you have no relationship with a bank, no relationship with a lender, I think maybe just shop around to see who would be the best fit because it's not only, obviously it's the criteria that you have to meet, but it's also the lender or the person that you're working with that'll make it a little bit more of a smoother process just because a lot of these lenders and brokers, they all shop from the same GSEs regardless.
Correct.
It's just going to come down to now the customer service and kind of the different options and how much a lender really wants to work with you.
Correct.
So I think that's another thing is just basically interviewing the lender, broker, or the bank to see what is going to be the best fit for every person's situation.
Absolutely.
So, but yeah, what would you say are some final takeaways that you would say for some people that are looking like whether to go with a bank or a lender? What are some final tips you can give them?
Yeah, I would say if you're shopping, understand how the market works. Because if you shop me on a Monday and rates go down Tuesday, Wednesday, and you go to Publix Credit Union on Thursday and the bond markets are lower that day, they're going to give you a better rate. So I'd say, if you're going to shop, just have an understanding how the bond markets work. If you want to do it the right way, just get everything in writing, get a loan estimate, make sure that you're transparent with your lenders and just tell them, hey, look, I have a loan estimate. I'm shopping you with A, B, and C. And whoever has the best numbers will take my business and just get it in a loan estimate. Right. And make sure that when you're comparing, you're keeping everybody on the same playing field and you're going to lock in your rate on the same day. So in other words, if you want to get the best rate, you want to try to ask all of your lenders, hey, here's the loan estimate. What's your rate today? And whoever has the lowest one on that date, that's probably your better lender.
Okay, of course.
Yeah. But just keep in mind that rates can change 3 times a day.
Yeah,
every day.
It is true. It is true. So, but I appreciate you taking the time kind of breaking that down. And if you guys have any other questions regarding using a bank or going with independent lender/broker, obviously everyone's situation is a little bit different and kind of where everyone's position and asset ratio is going to lie. So if you guys have any other questions about the financing side of things, I'll put Manny's contact information down in the description down below so that you guys can reach out to him just to ask him questions, whether whether you go with him or not, at least you guys are a little bit more informed on this whole entire lending situation here in Florida. But if you guys are looking to either buy a house or build a house with us here in Southwest Florida, my contact information is down in the description down below. Along with, if you guys are looking to move here in general, we do have buyer's relocation guides for pretty much all the cities in this surrounding Sarasota area. So I'll throw all those links in the description down below. And if you guys are looking to buy a brand new construction house, we do have a dedicated VIP email list that you guys can join that just basically highlights certain new construction products that you guys are looking for here in the Greater Sarasota and Northport area. But if you guys have any other general questions or comments, leave them in the comments section down below. And I look forward to seeing you guys all on next week's video.